Assalamu alaikum, Ahle ACCA. I hope you're all fine and in good shape and good mood. Am I audible enough to everybody?
Yes, it's okay. Thank you.
Thank you. Okay. So just rule number one, unless you've got a question to ask in the middle of the lesson, it's better if you keep your microphones off, because when I'm lecturing, when I'm talking, when your microphone is on, it's gonna disturb the lesson. So it's better to keep it off. So we're 14 now. That's good. And one more thing, once I start the lesson, I prefer to switch off my video because your focus should be not on me, but on the lesson. And that's been my principle since I started teaching. And for the first time from this group, and for the last time, hopefully, the lessons will be conducted exclusively in English, with little or no, like in very rare occasions, I can add some other languages for the needs of the students. Okay, everybody. Let me share my screen. It's being recorded. Hi. So if you don't mind, I'll be switching off my video. Thanks. And having the start of the lesson.
Can I ask just
Yep.
can I ask?
Of course.
Can we just deal with the how to conduct you during the lecture? I mean, should we just raise a hand or just saying out loud or something? Just if you have something to ask. What are the regulations during the lecture?
Actually, there are no strict regulations because I'm flexible with most of the time. What I want is that if you have anything to say, just type in the chat. There is chat. So someone already wrote here, everything is good. Okay, so you can type in the chat. And if I don't read the chat after some time, some of you may just speak up or raise a hand. It doesn't matter. Just speak up. Hey, sir, can you look at the chat? And I'll stop at that point, look at the chat and start answering your questions. Is that okay?
That's great. Thank you. You can start.
So 2 participants raise their hands. Well, I think it's just a test raising your hand. Like you didn't deliberately raise your hands to ask something. All right. Some hiding floating meeting controls. And we're starting. Okay, this is actually our demo lesson, but even in demo lesson, even a person with no accounting background will understand a lot about this accounting. And this is what I try to do. So today, January 2, 10 a.m. hopefully, we're having an online meeting because people are coming from different regions, different countries. Yep, as I said, we'll be in 90% in English and Uzbek or other languages, maybe only 10% of our class. So today it's totally free, just feel yourself. And the only requirement, you don't need to have a pen, pencil, copybook, paper, no need for that. All you need is just listening ears, good internet, so that when you're speaking, I should hear you. And good mood, that's it. Nothing more than that. All right, so this is financial accounting, and hopefully the first class of my last ACCA group of F3. I hopefully will answer why it is my last somewhere in the middle of our class, not from the first day, okay? Bismillah. Before we start every session, what I want students to understand is that, like, I don't just right away start the first lesson. I tell them what they are expected to achieve when we finish the course. I told you that it's gonna take 2.5 months. So within 2.5 months, hopefully you're going to cover this. So you will understand the logic behind accounting, and you can use this logic in any sphere, in any country's accounting system. Uzbekistan, USA, China, Vietnam, it doesn't matter, IFRS. You will learn these statements: financial position, profit or loss, consolidation. Some of these terminology might be new to you, I understand, while some of you may already know these terminology, what these statements are, it's okay. For those of you who don't know about these statements, you will get to know throughout this course. So statements means these are all financial statements, or in our language we say of any company. And lastly, I hope that you will have a sound knowledge on analysis of companies, like financial analysis. So when you are given the statement of companies, you will be able to analyze the financial situation, financial health of the company. It could be any company. It could be a company like Tesla, Apple, Microsoft. All you need is just the published accounts, statements, and then with the knowledge, with the sound knowledge of this course, you can analyze it financially. Guys, whoever has the microphone on, can you just please turn it off for some minutes? Thank you. And I haven't written here, but I'm gonna tell you out like orally. Let me again start this video. So when you successfully finish this course, the biggest thing I want is that you learn to study independently, so that when you finish F3, you yourself independently, without going to any course, without taking even online course, can take any other ACCA paper and any other certificate except for ACCA. And you might not believe it, but just stay with us for 2.5 months, and hopefully you'll become one of those. Thank you. All right. So far, so good. No chat. All right. Today, we'll be talking about these three. You might have different ideas. Are we going to talk about the cake? Are we going to talk about the wedding? Are we going to talk about the Westminster University, or iPhone 14 Pro Max, or Ronaldo, or Al Nassr, or football? What do you think? Like, these are the contents of today's session. So some people are interested in football, Ronaldo, while others are tech savvy. That means they are interested in latest gadgets, while others, like females, might be interested in like cake production. So I think today's lesson will be of benefit to most of you. We just turned off mute, because when I turn off, it's gonna take some time. When you turn off, it's better for you. Okay. Before we start today and today's contents, is there any question that you'd like to ask from me, or should I proceed? You can type, you can say it out loud, doesn't matter. Question, thanks. So I'm going on. So for those of you who don't understand the accounting, let me simplify it. You all have cash right now, maybe in your pockets, maybe in your wallet, in your bank accounts, in your debit cards. You all have money borrowed from your friends that you will have to give back. Some of you might be working and earning a monthly salary from your companies, from Uzbek or from foreign companies. And we all have the expenses, right? We pay for transport, And those of you who are studying ACCA, they have to pay for ACCA examinations, subscription fees. You pay for food, grocery, and clothes. Yes, you all have it. But how many of you keep the record of your income versus your expenditure? How many of you on a monthly basis write down like this month, let's say in December, I earned X sum dollars and I spent Y dollars. So I made a profit of Z dollars. Or how many of you write down what you have that's yours and what you have that's somebody else? So I have my phone, which is mine, and I have my car, but this car is my friend's, so I have to give back. From the point of company, like you may answer this question yourself individually, but from the point of companies, this is what accounting is all about. Okay. So throughout this F3 module in 2.5 months, you're going to cover these two big financial statements, or we call it Savotlar. The first is about your income and expenditure, but it's not yours, it's not your family's, it's your company's. It may be a small company, a big company, it doesn't matter. And this is called the statement of profit and loss. So when you write down your income and expenditures, at the end, let's say when you derive your income and your expenditure, so you earned, let's say, 10 million sums, and you spent on different items, let's say 6 million sums. The remaining 4 million is your what? This 4 million sums is your profit. But if you spend more than you earned, more than your income, then this is going to be your loss. This is the first statement. Secondly, that's what you own. Own means it's yours, right? What you have and what you owe. I think all of you know the word owe, right? Qarzor. Like, so we owe somebody means we need to give it back. We need to repay it. And this is called statement of financial position. Here we're going to talk about assets, liabilities, equity, and capital. Don't worry, if you know these items, it's good. If you don't know these terminology, you will learn today. So no worry about that. No more questions? Yep. Let's start from the assets. Those of you who have taken IELTS know the word asset. Asset is what benefits you. But in accounting, we say it is what's yours, what you have that you can spare or you can spend or do whatever you want because it's yours. It's like your house. When the house is yours, you can live in it. So let me write here. You can live in it. You can rent it to somebody. You can sell it to somebody and use the money. You can invite guests, right? You can invite guests, friends, because this is your house. You can do whatever you want. So assets in accounting are this. It could be cash. So the cash, the money that you have is yours. You can buy food. You can go to the films. You can go for the shop and buy anything you want. But in accounting, when we say cash, we mean not just the cash, this money in your pockets, but we also mean the money in your US card, Homo card, MasterCard, whatever, in your cards. These are all called cash for simplicity. It could be your smartphone. So you can use your smartphone, you can throw it, you can put it in water because it's yours. Your car, maybe, your house, we talked about it, money you lent. Just about this one, money you lend. Money you lend means somebody came for help, your friend maybe, and you gave, let's say, $100 to your friend. So he is in need now. He needs money now. He got it from you, but he will give it back to you at the determined time. So even if you don't have $100, you are expecting $100 that was yours. So this is also your asset. Do you all understand what asset is about?
Can you ask?
Yes, sir.
What about the money that you borrowed from someone?
Yeah, that we will talk about here.
You,
Like
you
here.
said about the lending, but
Yeah, money that we borrowed from somebody. Good one. Can I ask your name?
Ulugben.
A little bit. Let's say, let me make it an example now. So Abdulkarim, that's me, got $100 from Ulubek.
Great.
Okay. For me now, I have $100 cash. This is also my asset. But this is also asset of Ulubek because this is his money and I'll have to give it back to him, right? For me, it's a different kind of asset, cash. For Ulubek, it's a different kind of cash that's receivables. And we're going to talk about it shortly. So I'm talking from the very most fundamental and basic things first, and then going deep into asset types, asset classifications, their differences, and then going deeper and deeper. So that's why I didn't write it here. Okay.
That's yes. That means yes. It's also just included here, borrowed money.
Yeah, but then if I write borrowed money, and people might be confused, like money you lend also asset, money borrowed also asset, like what could be the difference? So that they don't get confused, I didn't include it here because I'll be talking about in the later of this class. Okay.
Great. And bank loans are the same scenario, yes?
Exactly. Bank loan is asset for you immediately, but then at the same time asset for the bank because they will get it back over time. Good question.
Yeah, thank you. Thank you for disturbing.
Okay. So I think we're done with assets. Let's go to liabilities. Liability, from the definition, должность, or it's like majburiyat, they say in Uzbek, but these are things we owe, which means you might have it right now, but you will have to give it back. You will have to give it back to somebody. You will have to repay to somebody. It could be your tax. Tax that's the invoice, I mean, that you have to pay for tax, but you haven't paid yet. That's your liability. The goods, I mean, I would talk about the amount of the goods I bought on credit. So when you buy goods, products, let's say household appliances like microwave oven, washing machine. So you have those goods, but the payment, the amount of those goods is your liability because you owe that company like Olchanov Towers, Technomart, that you have to give back the money. Bank loan too. Bank loan is actually in the form of cash. It could be your asset because when you get, let's say, $10,000 from the bank, you have this much cash now. But then is it all yours to spare? Like, don't you owe anybody? Here, there's the question. You owe somebody, you owe the bank. You got it from the bank, which means you will have to give it to the bank over time. This amount plus some interest, unfortunately. Fois. Loan from your friend too. So you get it, you have money now, but then this is not yours. You didn't earn it. You got it from your friend and you'll have to give it back to your friend. And lastly, unfortunately, this thing, those of you who are not from Uzbekistan may not understand this, but I'm sure that most of you understand this. Like toyona at your weddings, like people, especially male friends of the groom, let's say, they gather some amount. Usually it's about $50 or $100 each. And they give it to the person who is getting married, who's having a wedding. But then they expect that in their minds, they expect that on their own wedding, that friend will give back. Money ham to'yimda qaytaradi degan assumption bilan they give this money. Personally, of all the toyonas I've done so far, I never expected anything, really. Like, do we now understand what liability is from the basic terminology? So I can proceed if you don't mind. So asset is what you have that's yours. Liabilities you might have now, but it's not yours actually. And you'll have to give back. So we have one more, not proverb, but I think saying. What they say, like, so we're eating now, we'll have to give it back. This is not ours. And lastly, it's about equity or capital. For accounting, these terms are almost synonymous to each other. When you hear the word equity, you can even think that it's your capital. What is capital? Capital, like, it's not like poitaft, it is, but in accounting it's different. That's the amount, this dollars or sums that you invested in your business. Some of you might start teaching, some of you might have started small business of their own. And when you start your business with the money you have saved, and that amount is your capital. This one. And equity capital can also be shares of the company. So let's say the company Tesla might have 10,000 or million, but 10 million $1 shares. That means Tesla has equity or capital of $10 million. Okay, this could be equity. Don't worry, we will have we'll go deep inside of each type of asset, each type of liability, and every single detail about equity and capital within this course. Today, it's just your introduction to the basic accounting terminology. So let's have the example, because even if I'm not just copying from the books, I love it when we have the examples. So let's say there's a person called Batur. Like, don't get offended if there's any Batur here in the class. It's just their name that came to my mind randomly out of a sudden. So Batur bought iPhone 14 Pro Max on credit. On credit means he didn't pay cash. He will pay the amount in installments or after some time for $1,900 payable in March 2023, which means, let's say he bought it in December of 2022, but he will pay after 3 months, like January, February, March. Yeah, after 3 months, he will pay the amount. His phone, is it liability? Is it equity, or is it asset? What do you think?
It's liability.
Asset, yes. Please type in full. I might get it incorrectly. His phone is actually his asset, because If it's liability, then it means he'll have to give back the phone. No, his phone, he bought it. He's the owner now. Boter is now the owner of the phone. So that is his asset. He can use it, right? But what about liability? This $1,900 amount is his liability. Because he can use his phone whatever he wants, but then in 3 months, in March 2023, he will have to give this amount to this shop. Let's say Probox, wherever he wants. He bought it from. Okay. From the point of the phone, that's his asset. But the amount of this phone is his liability because he needs to pay it back. Are we clear on that?
Yes.
Thank you. Okay. This is another real life example. So let's say Medina started small cake business with 1,000 of her savings. So for 1,000, she might have bought some equipment, some forms, shapes, or we say polip for the cake, some designs, some ingredients, and she might have used this amount for her Instagram profile. But by the way, this is actually this Medina Cooks or something. I found it from real life example. So she started a small cake business, and this $1,000. What's this? Is it asset?
Equity?
Is it liability or equity? Thank you. Capital or equity. Thank you. Because she used this amount that she saved for investments in her own small business. That's equity. Thank you. But also from the point of company, let's say she started a new business, this cake business, and she bought some license from the government, and she now has a company, small company. And from the point of company, it's capital. Thank you. That's good. You do understand a lot. And about this. So I got it from Google. So how much is he paid in Al Nasr? So he gets about 173 million pounds per year, or it's approximately $200 million per year. And this amount, what is it for Ronaldo? What is it for Ronaldo?
Receivable.
Oh yeah, you can say
Asset?
receivable.
Receivable?
But there was 2 more terms. That's for Ronaldo, that's income
Income.
that he will earn. Yeah,
Salary.
that's income. He will. Yes, exactly. That's income, that's revenue that he will be earning throughout 1 year. I doubt that he will not be paid 200 million right away. Maybe he gets paid semi-annually, half in June, half in December, whatever. But still, that's a good amount, right? That's a very good amount for a footballer. What about for Al Nassr? What's this?
Payable.
Payable.
Debt.
Yes, exactly. Receivable, like he will receive it. But for Al Nassr, that's payable. They need to pay it to Ronaldo. Or it's called when they spend it, when they pay it, that's called expenditure. That's perfect.
Expense.
Yes, exactly. Lovely. So good. Now we see him more often. Good. I think about 4 years ago, we started to have more Italian football on TV. Now I think we'll have more Saudi Arabian TV on Saudi Arabian football on TV because of him. Okay, I think you're fine with this. Equity, that's asset and liability. That could be asset and liability, but income and expenditure too. Okay.
Can
I think we
ask
can
here?
proceed. Yes.
What about the donations? Just government donations or just the branch companies donations? Are they equity or just still asset?
Well, actually,
So asset
they're
is
not
just
equity.
comprised by the equity.
Yeah, let's say, but this is actually above the scope of this class, but for your information, yeah, for the only for the purpose of the question asker, let's say this Al Nasser, let's say, just exemplify, Al Nasser donated $1 million to, let's say, charity company, let's say. Is that example fine for you?
Yeah, great.
Yes.
For the point of Al Nasser, that's expenditure, and that's a decrease in their assets, so they are paying out this cash. For the point of charity, that's income, because they're getting some revenue. The charity's income is donations, and their asset, $1 million.
Mhm.
Okay. Great. So now, when we know what asset is about, so when the word asset comes up, it shouldn't be abstract, blurry. It shouldn't be something theoretical. When the word asset comes up to your mind, you should feel it now, that the asset was you have, that you can spend however much you want. Let's classify the asset into two types. They can be non-current, that's number one, and current, that's number two. Non-current means not for this year. So you use this asset for more than 1 year. If you buy, let's say today on January 2, 2023, if it is your non-current asset, then you will have this asset. You will make use of this asset for at least 1 year, at least 2024, more and more. It could be plant, property, or equipment. So let's say you bought a house from Tashkent City. Usually, people buy flats from this new residential houses, not to sell, but to keep it, because after some years, we know that the value of property will increase and they'll earn money. Or this plant. Plant means not this plant, okay? This is also plant, but in accounting, we don't mean this. We mean this plant. What's this?
Factory?
Zavod. Factory is fabrica. Yeah. Plant is zavod. Factory too. Yeah. Thank you. So this is your zavod or factory could be. Your cars. Like most of the people buy their cars not to sell. Like unless you are a seller in Sergeli Bazar or you're a car dealer, you buy a car to drive, right? Not just to sell. You buy a car to drive for more than 1 year. And that's why it's also your asset and non-current asset. Furniture, like TV set or kitchen furniture, or let's say Artel refrigerator, холодильник. So we buy it to use it for more than 1 year. And that's why they are called non-current asset, okay? And about current assets. Current assets, they are either they are cash themselves or they will be converted into cash, which means they will be sold and the money will be received within 1 year. That's the important point here. Within 1 year, not more than that. So number one current asset is your cash, because that's already cash. Receivables, we'll be talking about it shortly. Receivable is when you sell on credit. And when we sell something on credit, we expect to receive the amount within 1 year. because you can see that from any shop, like usually like Technomart, Olcha, Elmakon, it could be anything. When you buy this furniture, mobile accessories, some computers, you get it for like 2 months, 3 months, 6 months, at most 12 months. So this is your receivables. Inventory. People who don't know about inventory, you can understand that inventory is the products that you buy, but for the purpose of reselling. It's like people in the grocery shop, they buy products to sell it to the public, to the customers. And for them, it's the inventory. People in the stationery, kanstavar, they buy like pens, pencils, papers, copybooks, markers to sell. For them, this is the inventory. Don't worry, we will have separate topics for each of these items, even for planned, for cash, for receivable, for each of them. Today is your just introduction, okay? Do you now understand the classification between non-current and current assets? Thank you. Very good. And let's go to dig this liabilities. Liabilities are also divided into non-current and current types. The same thing here. Non-current liability is the liability that you have to pay not within a year, but more than 1 year. So let's say if you buy loan from your friend, and if you need to pay it in 2023, this is your current liability, because you will pay within 1 year. If you pay it in 2024, 25 and longer, this is your non-current liability, because you're not supposed to pay it back within 1 year. Okay, one example could be, hopefully we have this Iman project here, Iman Invest. And when you get a loan, 10-year loan from Iman, that means if you get loan now, this debt money now, you will pay in 2033. So 10 years from now. So this is your non-current liability. About current liabilities, that's your the amount that you borrowed that you have to pay back within 1 year. The first example is bank overdraft. Bank overdraft is when we have credit cards. In Uzbekistan, we don't have credit cards. So when your card doesn't have any money, zero balance, your bank gives you some money and you will have to repay it immediately, very soon. We'll talk about it too. Trade payables. So payables is the opposite of receivables. Receivable is when we sell on credit. So when we sell, we expect the money, we expect to get the money. When we buy on credit, we need to pay the amount after some time. So this is our trade payables. And again, don't get surprised, don't get discouraged if you don't know this terminology. We will get to know together about everything. I think the classification of assets and liabilities are fine with you. Let's now move on to a quick quiz. So can you write, not tell, can you write in chat? How can I call, what kind of asset or liability is this? The first, second, third, fourth. I have 5 in chat, good. Card, non-current assets, exactly. Non-current, non-current,
But I guess
non-current. Oh, yeah.
But I guess we need some specifications about the company, because car, if you are selling the car, it's just inventory.
Yeah, like here, in the first, in the second, in the fourth, you have to think about yourself. If you have this car, if you have this, if you have this. But here, from the point of Bunyad Kor Stadium, you have to think. Bunyad Kor officials. From the government, let's say. Good question. So yeah, correct answers. Can anyone tell the model of this car? Can anyone guess?
Maybe BYD.
Exactly, exactly. You're very good. That's BYD. That's Build Your Dreams. So the car, when you buy a car, that's your, what kind of assets? Non-current assets. NCA right here. What about the second one? That's Amazon Kindle.
It's non-current too.
Yeah, hopefully. So Amazon Kindle is a book reader, and it is produced for durability, which means you can use it for more than 1 year, and hopefully you will, unless you make this Kindle swim, because it can't swim. So this is also non-current assets. Good. From the point of government of Uzbekistan or Toshkent Hokimiyati, that's their non-current asset too, right? Because they have this building, and I think they built it in 2012, and it's been there for more than 10 years. So it is a non-current asset. What about cash? So that's current asset because it's cash already. So if it's one pack, 500 euros. So euro is this, multiplied by 100. How much is it gonna be? Is that gonna be 50,000 euros? Yeah. If you receive this money from the bank or loan from your friend, then that's your cash right now, but that's also your current liability or non-current liability. It could be, yeah. If you got this money from your friend so that you will pay back this year, it's going to be your current liability. If you got this amount so that you will pay back in 5 years, and this is going to be your non-current liability. Yes, Ali is also right. So it depends on from the point of who we're talking about. If we buy this car, not just to drive, but to make a profit, to sell it to somebody, then this is our current asset. He's right. The same here for Amazon Kindle. But because this is our first ever lesson, I want it to be very basic. Like, it's good that you have such questions, perfect. But all you need to know is that you have to understand the underlying meaning of asset, liabilities, equity, and their classifications. Somebody wrote, can money be non-current assets? Savings, for instance. Oh, you have been saving for a lot of years, but that's in cash amount. And cash is current asset only. And I will tell you why when I talk about cash. And the answer to your question is about liquidity. So let me not confuse everybody with this. When we come to cash, I can clearly explain you why current, why can't be non-current. Okay. Are we good so far? Then let's talk about this. When I was studying English, my teacher was super clever, and he didn't like examples like John, David, Johnson or something, Sean, the examples which he used were from our course, from our members, our friends. And when you read those examples, you will feel a lot. Like it's not just the sentence, it looks like almost alive. And that's why even in accounting, I prefer not just the examples in the books because they're so simple and abstract. I prefer examples from real life, like this one, Olcha. Let's say you're buying this, is that LG? Yeah, it's LG, let's say twin wash or something, washing machine, turbo washing, okay. So that's 14 and over 14 million sums. And when you pay for 12 months, it could be 1,948 million sums multiplied by 12 months. Let's see how much it's going to be. 1,948. Oh, it's going to be 23,376,000. Too much. One year. So you pay every month. Okay. For Olcha, what is it? The amount, the money.
Trade receivable for all chat.
Exactly,
If you
because they will
buy
receive it
on credit.
receivable. For the customer, for the person who bought it, exactly, sales on credit, but it's receivable. And for the customer, it's purchase on credit, and this is payable. And this one, this washing machine itself, for the customer, that's asset, right? What kind of asset?
Non-current.
Non-current asset, because hopefully, as LG washing machine is supposed to work fine without pressure, without defaults, non-current assets. Thank you. Good. I hope you're getting me. So about accounting equation. So whatever we do in F3, we build all the knowledge around this rule. The rule is that asset equals liability plus equity. Everybody knows it. Everybody in accounting knows about it, even Uzbeks who learn national accounting. But not everybody might understand the meaning, why it is so. They might feel that it's default, it's the rule we have to learn, but here's the thing. The real definition, the meaning behind this equation is this. We know what asset is. And to buy assets, we need money. And money comes from either liabilities, loan from a friend, loan from the bank, or from equity, our savings, or people buying the share of our company. So liability and equity is called the source of assets, manbase. Here's a real life example. Tesla, so in Shanghai, they built a factory. They have one factory, I think, in Mexico and one factory in Germany. They call it Gigafactory. They built this Shanghai factory. So factory for Tesla is what? You tell me.
That's non-current asset.
Exactly. Thank you so much. It's non-current asset because Tesla will be using this factory to produce cars in the years to come. But then they should buy it, right? It takes a lot of money to build this. And it takes actually $1.4 billion. And you see, Tesla to take new loan from Chinese banks. So they are getting this asset, non-current asset, from Non-current liabilities from the banks. You see, they explained this. Is that equation and the real life illustration fine for you? Yes, so. Good. And about double entry. So accounting is built upon this principle, double entry. Double entry means you have two entries. So life is about two things. We have good and bad, we have right and wrong, we have white and black, and etc., etc., etc. Versus we have Marvel versus DC, right? Comics. Even in accounting, we have two sides. And these two sides are called debit and credit. Don't think that debit is better than credit or credit is better than debit. No. One is not better than the other. They are both equal. And one more thing, credit doesn't mean credit from the bank. It's just a terminology that is never translated in any other language. Even in Uzbek, we call them debit and credit. Even in Russian, I think in any language, that's the language of accounting. The two things are called debit and credit. Finally, I welcome you to the most fundamental, most essential #1 entry sheet. So we know about assets, about liability, is about capital, about income, expense. We don't know about drawings. So we'll talk about drawings. Don't worry. So what's the meaning behind double entry accounting? For every debit, if we have debit, we should have equal amount of credit. Okay, that's the meaning. For the next class, I want and I require all of you to learn this chart. How? So asset plus means when asset increase or when you add to your asset, that's your debit. You write it in debit side. When you decrease or sell your asset, that's your credit. Liability is vice versa. When your liability increases, like when you get a new loan from the bank, that's in your credit. But when your liability decrease, that's your debit. So someone wrote income should be plus on debit side. No, it's not plus on debit side. Income is plus on credit side. And wait till the next class. If you have some problems, it's okay. Income is correctly here. Capital. So capital and equity, when we increase capital or when we start our business with the capital, with the money, that's on credit side. But when our capital decrease, it's on debit side. Income. When your income increase, it's in credit. When your income decrease, it's in debit. You might say how your logic, like you might have some trouble with your mind now. It's okay. Just trust me, trust the professional. Until next class, just learn this, only this one. I don't ask you to learn any other thing, just this one. And in the next lesson, you will understand, you will feel it. Oh yeah, you say. Income is revenue, that's why it should be on credit side, right? Yeah, exactly. And in the next class, I'll just like blow your mind, open your mind about this. So you will not only learn, but till next class you will learn, but in the next class, when you have learned this chart, you will feel it, okay? So you might think that, oh, again, boring chart. Do we have to learn this? Yeah, you have to, but don't think that that's something difficult, because out of my curiosity, so I got it from the book. just half a page out of 290-page book about accounting. National Accounting Standards of Uzbekistan. You see, this is just half a page. They have the numbers. So National Accounting Standards of Uzbekistan are based on learning numbers of accounts. So you have to know that 5010 is the cash account. So, and we have numbers for every account. And that's very difficult. That's really difficult, actually. Because when you're learning numbers without understanding how, they will kill you. So we'll talk about drawings very soon. Don't worry about it. I deliberately missed it, okay? This is just an example. The accounting of ACCA or IFRS is really simple. All of it is based upon this chart, okay? So national standards of Uzbekistan are based on learning numbers of accounts, but ACCA is based on understanding, the feeling, the names of accounts. And you will feel it. You will agree with me in the next class, hopefully. I'm not here criticizing national standards. It's good, but then it's hard to learn all these account names, all these account numbers. Okay. So let me exemplify. So what's left here is drawings, right? I tell you that drawings plus means when you have new drawings, it's debit. When your drawings decrease, it's credit. What is drawings? Drawings is, let's say, you have inventory. You have a shop, let's say, and in the shop, you have some sweets or some candies. Instead of selling, if you take this candy and eat it yourself, it's still drawing. Or you have cash in the business, and if you use this cash not for the business purposes, but for your own personal use, that's also drawings. So drawings means, in simple words, taking the asset of the company for your personal use. Okay. Let me now exemplify this. Let's say there is Okolake, Malika Bazar seller. So let's say he works in the Malika Bazar, A23. I think you know Malika Bazar in Tashkent. Those of you who have been to Tashkent. He bought, let's say, iPhone 14 Pro Max from Dubai, from China, from Vietnam. It doesn't matter. For $1,400 cash. Okay. And let's write it in double entry. All your focus should be on this example now, for now. So let me change the color to my favorite. What's happening? Okolake bought iPhone 14 Pro Max for 1,400 cash. Okolake now has what? He has like debit. His asset is increasing, right? What kind of asset? Debit. I write here his inventory. Why did I write inventory? Because he bought 14 Pro Max to sell, because I told you that he works in Malika Bazar. Yes. What about credit? He paid cash, you see? Cash. Cash is our asset. But is his cash increasing or decreasing? His cash is decreasing because he's paying cash. So when asset is decreasing, you see minus, you write in credit. I write credit here, and I write cash. His inventory of mobile phones is increasing, while his cash is decreasing. These two things explain each other. Let me tell you how. You see credit cash, which means credit cash has decreased. And you might ask why. why did my cash decrease? And you look at debit and say inventory. Oh yeah, my cash decreased. I spent cash on buying inventory. Or you can look at it from debit side. You see that in your debit, you have inventory. Oh, which means inventory is your asset and you have a new asset. And you might ask, like, how did I buy it? From which money? Did I buy it from loan? Did I buy it from my own money? You look at credit side and you see cash. Oh yeah, I bought inventory for cash use. Don't worry, this is just an illustration of double entry chart. Detailed, these debit credits will be the topic for our next class. Will be very, very interesting. But today, I want you to understand just the meaning. So here, let's say he bought it and now he's selling it. ACCA sells the iPhone 14 Pro Max for $1,700 cash. What's happening here? You might ask yourself, what is debit, what's credit? Oh, we already have the answers. Debit cash, yes, because he's selling on cash means he gives the iPhone to the customer. Customer gives the cash to ACCA. So his cash is increasing by 1,700. Cash is our asset. When cash increases, you see, it's in debit. Debit, I write cash of 1,700. And in credit, I write ACCA is a seller in Malika Bazaar. Sellers in Malika Bazaar get their income through sales. And when we sell, it's our income, right? And income increase in credit. So in credit, we write here revenue or income, $1,700. You see one thing, our debit and credit is equal. We have debit and credit, and their amounts are also equal. And these two things will explain each other. So you can see that you have cash 1,700. You might asking, where did this cash come from? And you say income. Oh, it means I sold something. And you see that income of 1,700. So did I sell it on credit or cash? You look at the above and you see that cash. Oh, I sold it for cash. These illustrations are just made to exemplify double entry chart. But believe me, if you know asset, liability, equity, if you know classification like non-current, current assets, if you know what cash, inventory, and other things mean, it's enough for today. It's really fine. Because everything will be explained out of one layer. Like today, one layer, tomorrow, another layer, and etc. So at the end of all my classes, hopefully, you will have this glossary. So glossary means the definition of new terminology. One of them could be inventory. So inventory is the products you purchase with the aim of reselling. It's like iPhone 14 Pro Max for ACCA because he bought iPhone for selling, for resale. Trade or receivables, we say. Receivable is when you sell on credit, you don't get cash, but you expect cash in some months. This is called receivable. Payable is when you bought on credit. So you're not paying cash right now, immediately when you purchase, but you will have to pay cash after some time. Okay. And about drawings, I told you that it's assets, money or goods that you take for not business, but for personal use. If you have a shop and if you eat one chocolate yourself, that's drawings. If you sell, it's not drawings, because selling is business purpose. Eating yourself is your personal use. Okay. Do you have questions so far? There might be the mix of people, like people who already know accounting, people who don't know anything about accounting. Even those of you who have no idea of financial accounting, did you understand assets, liabilities, equity, non-current, currents, and etc.? Do you have questions? Because I have some very, very important questions for you after you give me your questions. I think it's clear. Okay. So first of all, let me introduce you to the homework. So preferably, please take a note of the lesson on your copybook. You can take a note from the video or from the lesson slides that I will upload into the group. Or you can have it in your memory. It doesn't matter. The only thing is to give it back to me when I ask a question. When I ask a question, you should be able to answer. It doesn't matter if you write it down or don't write it down. And it's must. You have to learn all the new terminology in this lesson. If any terminology comes up to you, you have to learn it, okay? Because if you don't, it'll become too hard to understand later chapters. And for all the quiz and exercise that we have done in this class, you have to replicate it, which means you have to try it over again by watching or not watching the video. And lesson 2 will be 70% tougher. So if, let's say, the difficult level is 100%, it's gonna be 170% in the next class, because we're going to cover something in detail, the most important lesson of any accounting. But if you follow these homework, like 3 steps, it's fine. Some of you might be asking, why do I have so many illustrations? At the start of the lesson, I told you that it's better if I put my video off, because when my video is on, you might be confused and you might have distractions. You might be like wondering whether you have to look at me or on the screen. So that's why, to keep your full focus on the screen, I kept my video off. And you might be saying, why do we have so many illustrations, right? Here's the answer. Illustrations are visuals. So 90% of the information that transmits to your brain is visual. So it's better than text. And more than half of people, over 65% of people, learn better, much, much better than visual, than just text. And you proceed or process information so much faster, 60,000 times faster. And also, because we are having an online session, I cannot use my gestures, body language, and I cannot look at the eye of each of you. That's why I want this class to be engaging with the use of examples, with the use of visuals, some illustrations. Let's check it. I know that today we covered fewer terminology, but even so, you may not remember all the concepts from today. But you do remember this. iPhone 14 Pro Max. Can you tell me the color that we used in the book, that we used in this lesson? What color was this iPhone? Black. Oh, is it black? I don't think so. I don't think it was black.
I think blue.
That was purple. Deep purple. I think. I guess so. What was that? Let's go back. Yeah, deep purple. You see? Not blue. I want black one. I didn't tell you which one you want. Okay. Do you remember the cake that was in the picture? Do you remember what was written on the cake?
Yes, yes, of
Yeah,
course.
right on.
You see? Good. You remember that. And what about CR7? What color was the jersey? Or jersey means t-shirt, футболка.
Yellow.
Yellow.
It was yellow. You see, like you were aided with visuals. You definitely remember the color, the cake, the meanings, but you may not remember all the concepts. And that's why I try to use visuals more. And let me call it a teaser. So next lesson, we'll be talking about some accounting about this burger, or I think this is called tandır lavash, and about Atto card, which is used in Tashkent for public transport, and about this trophy that Messi was awarded, and the payment with ACCA. I will incorporate it in the contents of the lesson. So these will be talked about in the lesson. And our next lesson is going to be hopefully on January 5 at 6 p.m. So I think I'll talk about details in the group, but 6 p.m. Those of you who want to come offline, that the address, the location will be sent to the group, to everybody. Those of you who are going to join online can join with the link that we use today. Like this link will work till the end of our F3 module, till March. So no new links. The Zoom link that I pinned in the group is universal link. What's the schedule? Yeah, this is the schedule. Well, actually the schedule is not set yet, but our next lesson will be on Thursday. So I'll give 2 more days for people to process, to decide for themselves. Yeah, for that reason. And some more time because people might take time to come back to Tashkent. People might be on travel. So our next lesson is going to be on 5th of January and on the same format. So actually my point is actually to improve, to promote this online sessions, because you won't have to waste your energy, your time, your money, some distractions on the road. So if any new thing that you learned, if some revision has been made, if you got anything from this lesson, and session, I'm happy for that. I'm really grateful for that. Thank you. And this is it for today. And by the way, one more thing. The whole recording of today's session will be uploaded into the group. Don't worry about it. Even if somebody is unable or has been unable to attend this session, they can watch the video without any trouble. Right. And enjoy the rest of your day. Thank you so much and talk to you.